business owners likely will have only one shot to sell a business. Most don't understand what drives value and how buyers look at a business. Until now. Welcome to the How to Sell a Business podcast, where every week we talk to the subject matter experts, advisors, and those around the deal table about how to sell at maximum value. Every business will go to sell one day. It's only a matter of when. We're glad you're here. The podcast starts now.
I recently was reading an article in one of our business valuation trade magazines, and it was by Trisch Garthoeffner, and she was writing about Bitcoin and cyber, or not cyber, but crypto and mining companies and their valuation, and it's one of those things where you see a practitioner that is at the forefront of an industry, and this isn't going away. So I contacted her, and we originally tried to start recording, and I had a number of questions, and she said, I have a colleague, his name's Nainesh Shah, and he participated in helping me with the article. So I think it would be best if we get him on the line. So we rescheduled the podcast. And so this is about Bitcoin mining, and the valuation. And I will be the first person to tell you that I have absolutely no idea, or at least I didn't have an idea of how the mechanics of a business like this would work. Because, from where I come from, we're business valuations based on earnings, growth, and risk. And when you start combining all of that with Bitcoin, oh my goodness, the moving parts are just really would give me such, I don't want to say anxiety, but it's really hard for a practitioner to offer an opinion that's sound with that many moving parts. So let me tell you a little bit about who we're talking to today. So Nainesh Shah of Complete Valuations out of New York. He's a finance professional that specializes in business valuations. His expertise lies in innovative business valuation techniques, which include the renowned subscription-based Apple valuation and unique sum of the parts model for Amazon. And he delivered. Boy, oh boy, did he deliver when we spoke earlier today. And next is, like I said, Trisch Garthoeffner. She is the founder and president of Anchor Business Valuations. Anchor is focused on business valuations for private and public companies between $50,000 and $100 million in gross revenue. And she does all kinds of business valuations, from estate and gift litigation, sale, merger, fair value, and things like that. So this podcast was one that stretched me a lot, because I want the audience, I want you to know, when we're done, that you got something out of it, and it just wasn't me just trying to keep up with these guys, but they were so gracious with their time and really explained, just the mechanics of how this industry works, how the business works, how to value it, and then what it looks like here in the future. So I hope you enjoy my conversation with Nainesh Shah and Trisch Garthoeffner as we talk about Bitcoin and the sale of Bitcoin mining companies. Well, welcome to the show, Trisch and Nainesh. How are you?
Great. Thank you for having us.
Well, I've been looking forward to this since you got on the calendar, and I've, in preparation, it's a little daunting, the topic we're going to talk about, which is crypto. And so I guess where I'd like to first start is I gave some limited introduction before you came on, but now I guess from a high level, can you talk about each of your respective practices, from because I know you guys do more than just crypto, right?
Yes, exactly. So I'll start off, Nainesh. I met Nainesh actually through the National Association of Certified Valuators and Analysts, which is an association that we're certified through, or at least one of them that we are, as business valuation experts. And my practice is Anchor Business Valuations and Financial Services. I started it about 10 years ago, worked on Wall Street for a number of years as a financial analyst. And then when I moved outside of Manhattan, got into doing private company Main Street valuations. I also do a little bit of M&A as well, working with the small business owners, helping them through the process. Did litigation for a number of years, but I stopped doing litigation as of about 6 months ago. Try to keep that to bare minimum, just closing up cases, work as a neutral, work as collaboratively and cooperatively as possible. Got a lot of great experience from working in the courtroom, but not really something I wanted to do ongoing. So for the most part now, I do all types of different valuations for estate and trust, purchase price allocation, so fair value. I'll work as a neutral on divorce matters and for shareholder dispute. And I also do quality of earnings and a little bit, like I said, of
Nice.
helping my clients go through a sale of a business.
Nice. Nainesh?
Yeah, and I think I have a very similar background as Trish. I come from Wall Street. I was a portfolio manager for 25 years, analyzing public market, public equity of all different type of industries. And we both come from a little bit of a different background. We come from finance rather than accounting, which is typically what you see in the valuation work. And so right now, my company, Computer Advisor, we've been in business for 5+ years, and majority of our work is connected with trust and estate. But then we also do M&A. So we have a smaller business to understand the value that they have in that business, and then they can go and sell in the value.
Yeah, nice. Well, I ran into you both when you guys had authored an article about crypto, and I hadn't given it any thought that there is even a market for this, and you guys were kind enough to come on and talk about that. So that's where I think where I'd like to begin is how did you get involved in this particular sector? And then I guess I want to talk a little bit about the valuation and the mechanics of how this whole thing works. So either it's a loaded question. So either one of you.
I'll start off, Nainesh. A little over a year ago, I received an inquiry. A lot of the business that I obtain is through word of mouth. And so one of my referral sources had referred me into a client that owns a relatively large cryptocurrency mining company. And he needed to obtain valuations for several of his entities for contractual purposes. Mm-hmm. And so, I was very surprised, honestly, to know that in a smaller area of the United States that there was a business of this sort. But I became fascinated with the sector, reached out to Nainesh, was picking his brain about the industry, and come to find out that he has a lot of knowledge on the investing side and on cryptocurrency side in terms of just already in existence, the knowledge base that he had. So I asked if he wanted to team up, and he teamed up with me. And that's, I think, how we got the ball rolling and really getting enmeshed in this sector. And it's taken off from there.
Okay.
Yeah. And my involvement, so I mentioned about my portfolio management work. And one of the big things that we were doing back then is try to understand change that happens around us. Technology change or business process or something similar. So one of the change back in 2011, 2012 that I was noticing about introduction of Bitcoin. So just to grasp what's going on, I invested. So my friends hate me for that, but my interest was to understand what is going on with this new idea of currency. So by investing your own money, you keep in touch with what the change happening, and that's what kept me into it. And that's why Trish and I got together about this project, it became quite easy because I knew what was going.
All right. And the thing, like for a lot of people that listen to this podcast are fascinated by the different industries. And I think from a high level, can you talk about just the mechanics of this cryptocurrency and the mining, just from a high level, for my own benefit too. I mean, I know, everybody hears about it. Everybody, they see it on the television, but I'm not certain everybody understands what all this means. It's just, it's a currency that's trading, that goes up and down, and, the sky's falling when it's crashing. And boy, you wish you owned more of it when it's going up. So can you talk a little bit about, just the mechanics of how it works?
Yeah, I can start, and Trish, you can. The idea originated with this white paper written with a pseudonym, some Japanese pseudonym, about blockchain and then currency that can reside on that blockchain. And blockchain is nothing but a ledger that is confirmed by public computers.
Okay.
And so that's something called node. There's a network of node, and the blockchain resides on that. So every transaction that happens on blockchain is known, although it's not known by individual person, but it's known by the number. And so that's the component of blockchain. Bitcoin is the application on top of blockchain. And then the mining is connected with who is confirming the blocks that can go on the blockchain. And the mine that every time you mine a block, there is a compensation that is received, and that's where the business.
So define what mining means. I mean, I understand the coins and the tokens and the nodes, but we keep on hearing about mining and the power it takes to mine. I mean, help me.
Right. So there is an algorithm that means for someone to every so often bunch of transaction that happens in. Let's just stick with Bitcoin for now. Bunch of transaction that happens in the Bitcoin space needs to be confirmed, and the confirmation happens by solving the algorithm. Whoever solves the algorithm first gets the money or compensation for solving the algorithm. And once it's solved, it connects with the previous block, and the blockchain continues. So that's it's not mining in any conventional sense. It's the mining of figuring out who's getting the block confirmed.
Okay.
Am I making myself clear?
No. I was wondering whether. Yeah, I saw Trisch a couple times. Had something to say, and I was just curious. Did you good?
Oh yeah.
Okay.
I was just going to concur with what Nainesh is saying. That's referred to as proof of work. So these nodes, computers, basically are continually creating trying to solve this algorithm. It's called hashing. They're 64 digits long. And then after a period of time, just based upon the odds of whether or not it will happen or won't happen,
sure.
it will come about that the miner will receive Bitcoin.
Okay. And then the mining company is competing to solve the algorithm, and the miner then takes a portion. I mean, what are the financial mechanics of the miner?
Yeah, so it's similar to like a trading desk. So, in my opinion,
okay.
But it would be like you're either a proprietary trading desk where you are mining for yourself, or you have services where you're mining for other individuals as well, and then you take a percentage.
Okay.
So yeah, and they'll keep it on the ledger. They'll either keep it on cold storage, which is offline, or they'll keep it and online. They'll have it in a wallet. So
Sure.
however the Bitcoin is obtained and then retained, and then they'll keep it for a period of time until they want to use it or convert it.
Okay. So
in a way, if you think about it, if it is a gold or silver metal that you're trying to mine, you extract it, you hold it, and then you sell it at certain point,
right.
depending on what you think about market condition at that moment.
So why isn't everybody running to be miners? I mean, what does it take to be a miner?
Oh, I'll start off with that.
Yeah,
The barrier to entry is it's cost prohibitive. So it's
Okay.
extremely expensive to get up and running, to have the computer software, to have the actual equipment, to have the space, to have all of the mechanisms in place that would allow for the best profits. A lot of times that might include contracts with electric companies, because this proof of work, the mining, just again, sticking with Bitcoin, for example, it's very costly because of the energy that's expended for the mathematical algorithms that are taking place over that time period. The one thing that I did want,
there are thousands of you need computing power because algorithms are difficult to solve. So you need huge computing power, and you can think in terms of data centers. So you need a huge data center. Now it's using a lot of energy, and people in the past have chosen to keep this miners or devices in a location where energy is inexpensive, cheaper. But then it comes with a problem. So, for example, and this our Trisch's client kind of mentioned is China. China has a cheaper energy consumption, energy cost, but then you don't have the same security about the regulation. Suddenly, one day they can say you can, stop mining, and that's that.
I got it.
right.
Okay, so so the miner, this is really about computing power and literally energy that dictates a miner. So the guy that's like, look, I'll be a miner and I'm going to run this thing off my laptop. That's just that doesn't work.
I've had friends that have tried to do that,
Really?
but then they ultimately end up outsourcing it.
I was going to say, because it would seem as though that it's a big land grab right now, to be a miner, or is that not true? There's, it's the internet, it's infinite. Anybody can be a miner, or no?
Well, it depends on what. So I'll start off with respect to the Bitcoin and the limitation. So Bitcoin, there's a cap, and there are 21,000, I think.
1 million.
Million, and they're at 18 million, so it's at 85%. So, but that even in itself isn't supposed to be fully mined until 2100 or 2140 or something like that. So, but it's nearing 100% in terms of being mined by 2040. But I think that in terms of the land grab, I think it's the barrier to entry with the cost, so it's cost prohibitive. The Bitcoin is, I would say, Nainesh, you could disagree with me, but I would say that's the safest. Yep. Yeah, in terms of mining, and there's a cap on it. There's a limitation. Yeah. So
I get it.
The way to think about this ad is, if you have a regular business, you're getting cash, right? You sell a product, you sell a service, you get money, and then you use that money to spend for the expenses that you incur to generate the revenue. In case of mining, there's no real cash coming to you. What comes to you is this currency,
sure,
or digital currency, that somehow you need to sell in the marketplace, and the marketplace is volatile. And I think that's what one of the questions you might have is, how do you really, handle that? But
yes. That was coming. Is that okay? I make you and I. Yeah, what I was getting at is that the time, I buy something for $1,000, right? And by the time you and I do a transaction, it comes to me, and that $1,000 made the delta between now and then, it either may be substantially higher or substantially lower or stayed even, which, yeah, I mean, to me I think the fascinating thing about the whole process is that, and again, I think it's the purchasing power. Like if I have $1, I mean, you have inflation and so on and so forth. With Bitcoin, I think it's somewhat similar. It's just that there's just so many more moving parts and the volatility of the currency, right? Or am I missing that? Is that a good way to say it? Okay.
It's a unique business because of the volatility.
Yeah.
And so, yeah, go on, please.
No. So where I was heading is, all right, let's talk about valuation. All right. So
well, cryptocurrency, first of all, was put into place as like in opposition to inflation. So that's why they, like with the U.S., we have quantitative easing, so we can create money and churn it out, and our debt is through the roof. What we do, right? And so I think with Satoshi Nakamoto, who wrote the blockchain paper in 2008, I mean, his whole motive was to counteract the impediments of what they refer to as fiat currency or fiat currency, which is currency that is not secured by any underlying asset. So it is supposed to be a hedge against that, if not to take over eventually. So
and to have all the checks and balances at a moment's notice that we're always in balance, and to me that's probably the most powerful. The most powerful thing was that, as you guys too. I mean, the reliance on good numbers is always great. Being able to know what you're looking at is true and accurate is key. But that takes me to the valuation. And again, you have so many moving parts there. I mean, as appraisers, we kind of have I'm assuming the mechanics are the same, but I don't know that. So can you talk a little bit about, some of the factors that you guys looked at or look at when you're evaluating like a mining business?
Sure. You want to start, Nainesh?
Sure. You can always go back to the basics in terms of valuing a company. The basics are simple. There are three broad ways one should think about valuing a company. You can think about asset value, asset approach, market approach, and income approach. In this case, you can add one more way to think about valuation, is the network approach. We're trying to, and I'll start with the last one, which is we're trying to identify what is the value of the total network that's producing this currency. And can you identify the share of that network that your business represents? That can be a way to think about that.
That's interesting.
If you go back to the asset approach, it's still, you have the hardware and the data center or the location, and then maybe you can value the agreements that you might have with dealers. But the problem with asset approach is if you are not capturing the intellectual value of the business. Market approach is better. Because there are public companies that you can compare your business with. There are public cryptocurrency mining with it.
Oh, really? I didn't know that.
Yeah, there are 3-4 of them that you can. And so that you can use, and it's hard to. But the flip side of the trouble with that is there are not many transactions that happen. So market approaches are not that clean. And then income approach, you want to touch on that. Basically, you're looking at the future income.
Yeah.
Trisch, do you want to cover the income approach, and then I can...
Oh, yeah, sure. I mean, I wanted to note, too, with the market approach, the issue being more than not is the size comparison. So there's just such a discrepancy that it's hard to compare apples to apples. It's completely, it's comparing apples to oranges a lot of times. So The income approach, you're going to look at, it's hard to predict the future, obviously. So especially for a mining company, if it was a holding company, I would say even the asset approach would be the best, depending on, whether or not they're doing services for investing for others as well. You would want to potentially look at any kind of cash flow that's revenue that is generated from services that they provide to client base. But for the income approach, I think for the one that we did, I think we did a DCF and we did a capitalization of earnings to kind of compare the two, which means we looked at historical and we looked at future. A lot of close conversations with the owner operator in terms of what he has done historically. So being a newer business, it makes it even an added layer of complexity because we don't have that historical data to look at. So if there's a concentration on the cryptocurrency, you can look at different databases that have the research out there that show like the technical analysis and the fundamental analysis for that asset, and be able to predict when, for example, like Bitcoin, when the next halving might occur. And then talk to the owner in terms of what is their strategy that they have in place for exiting the market. You want to avoid the buy high, sell low mantra that seems to take place in a lot of everyday traders, and they have a similar kind of mantra that takes place in cryptocurrency, like with the meme stocks and pump and crash is what they refer to it as. So you want to make sure that you're looking at the strategies that the owner has used historically and what they expect to use into the future. So you're working very closely, as you would with any other type of valuation, but even more so because it's a newer industry that hasn't had that, footprint in place too long.
The other component of this, so and you touched on this earlier, it's hugely volatile. That's a challenge for valuation work. Right. And there are a lot of risks that you don't see in conventional industries. So that needs to be somehow be reflected on the valuation. And the way to do that, one way to do that is to adjust your discount rate accordingly. So you create a DCF, but then you need a rate at which you want to discount that future cash flow. And that you increase because of the risk connected with all this things that we mentioned.
Mm-hmm. Well, it's funny because when you're creating your forecast, and even the discount rate you alluded to the DCF, I'm sitting here going, oh my gosh, how are you possibly getting to a point where you have confidence in that forecast and you've quantified that risk in that discount rate? Because and I mean, it's not being critical. It's one of those things of, I mean, your opinion is probably as good, is probably better than most, but it's still, there's so many moving parts that are going on. So that's kind of where I'm going is I think it's even, the difference in business valuation. I'm just kind of curious to know there's another layer to the valuation that you're doing, It's
a lot of sensitivity analysis too. So I think one thing that we didn't realize prior to going in is that we didn't necessarily price it accurately.
Yeah, you mean the work that you did?
Yeah,
that's always a challenge.
Yeah, we've all paid that tuition.
It was a gift to be able to work on that one. I really felt honored, but at the end of the day, we would think we would be rounding the corner of finishing up a draft, and then we would think about something else, taken into consideration. Another, CapEx, when you need to switch out the mining equipment at a certain point, and halving occurs, and then the mining slows down, and then you need to have more energy. Taking all those things into consideration, it was I mean, very,
And
very.
how long our client is going to keep these coins, and what is their buying and what is their selling strategy. So that all has to be captured in your evaluation.
Right.
Right.
And
right.
on top of that, I was thinking about, oh my gosh, what happens about a fractional interest valuation in this type of business? I mean, because, depending on who that valuation is for, that could be a real, the intellectual, perhaps the person that's driving the business and has all the industry knowledge. That's the person that's wanting to be bought out. My goodness, what is the risk now to that business? So there's a couple additional layers that I don't envy your position. Oh my goodness.
Yeah. We talked about alternative way of thinking about this valuation. Trish and I talked about, can we bring optionality or option valuation?
Yeah.
Oh, sure.
Equation and see if that helps.
Oh, yeah.
But sometimes, and because this is a new industry and not many transactions that happens, simplicity can add value as well. You don't want to make too complex because and in the end, it's all your estimate. It's subjective.
Yeah, and that's where that was my follow-up question was, who challenges you on this? Because it is so new, and I guess if you can follow, it's the same thing in the profession, regardless. If you can follow the appraiser's thoughts and how they came to the conclusion, it's their opinion. But I just
it's a hard to challenge. Once you come up with a valuation, you put in enough effort, and you have covered all the angles. Yeah, it's. What do you think, Trish?
It reminds me of dispensaries when they first came out. Figuring out taxation, figuring out the security of the nefarious activity with them. Licensure, just being a new sector, just tweaking that out along the way. So you just have to abide by your standards, of your.
Yeah.
Yeah, and one thing common between cannabis and this is there's a regulation connection, right? Government regulation. How is it going to impact the business?
Right. Yeah. And again, that, and it's nice that you bring up dispensaries, but one of the things that we bump into is, who's the who is going to be able to buy these type of companies? Because, it's not a financeable business from a conventional standpoint. So you got to go private equity. So
public companies too. Yeah. They're buying up a lot of the smaller ones, smaller, successful mining companies in particular.
That's what I mean. So the public companies you said?
Yeah.
So they're picking them up. So you're starting to get some market data to give you a good proxy for value. So that's
helpful. Sure.
Yeah.
Mm-hmm. Slowly. There are 3-4 large public companies that you can look up to and see what transactions they're making.
So then the question becomes, is that fair market value or is that strategic value? And now you have the whole new matter of that challenge. But again, I think that it's I think when the cannabis related businesses, again, another big land grab. There is only a handful of people that understand that the value of that and are immersed in it. So again, I applaud you guys for the whole crypto thing, but I shouldn't say the thing, the whole crypto industry. One of the things that Nainesh
one thing just I want to add is it will be more and more required and necessary to value these businesses because you will need some, tax planning. You will have a partnership dispute. You will have a divorce issue.
Sure.
And you will have to value. It's not a small industry. It's a pretty decent sized industry.
Yeah.
Mhm.
So yeah, speaking of, I mean, how big is the industry?
It's a good question.
Yeah, come on.
Billion.
Think in terms of the size of the market cap of individual currency, right? So I have a web page on, and I can look up current market cap for different type of. Bitcoin is about 520 billion in size.
Okay.
That's the largest.
Okay.
Then the next largest is Ethereum, which is about 218, and then the third largest is Ether, which is about 82 billion in size. So let's just stay with that.
Yeah.
So let's just round it up about $1 trillion in coin size.
Okay.
The trouble with the size of the industry is it's so fragmented by country. I mean, you have a lot of players in Europe, you have a lot of players in China, you have a lot of players in the US, and then the rest of the world. And so it's very hard to gather data to really grasp how large is this industry.
Yeah.
But there's a public company called Riot Blockchain. That's about 2.3 billion in market cap as of last week. And HUT, which is about 500 million in market. So you have some sense about it.
Well, I'm embarrassed. I'm sitting here thinking domestically and which, and until you started talking about, just the whole international ramifications, it didn't even cross my mind. I think I'm probably like many thinking that, this Bitcoin is just a U.S. thing. And it's
not. It's absolutely not. It's probably much larger outside of U.S. than in U.S.
One of the things,
that's part of Satoshi's implementation or intention too, was to have banking available to all.
Yeah, well, that's what I was embarrassingly sharing, that I'm thinking it is. I knew that this was a worldwide thing, but for the most part, it's just, how does this affect me? And that's probably the wrong way to be looking at it. So, Nainesh,
during COVID, it became way more widespread than it was before COVID. And, there are millions of people who own some kind of crypto.
Yeah.
And that kind of tells you the size can be pretty large.
Yeah. So, Nainesh, you had mentioned something called the network value, and I want to poke at that a little bit more, because I do think the three approaches to value will always be there, but I'm curious to see if you could talk a little bit more about that.
Yeah, I would. The numbers I shared with you about size of the Bitcoin, the value of Bitcoin in the market. So the market cap of Bitcoin.
Yep.
520 or 521 billion, right?
Yep.
That's the beginning of thinking about the network value of Bitcoin. Now, if you are a miner and you are mining multiple type of coins and multiple type of tokens, you have to figure out the percentage of each and then start understanding what are you capturing from that network.
I understand.
This is just a start. This is just an idea that I kind of shared with you, but that's how one should be thinking about. And let's say right now there are about 17,000 or so nodes for Bitcoin blockchain. Then you figure out how many nodes you have, and that becomes your percentage, and then you can kind of start thinking from that perspective.
I got it. Well, thank you for that. So it's crystal ball time. So where is this industry heading? And whichever one wants to come on in. The water's fine.
Way clearer crystal ball than I do. So
I'll start off. I think it's heading into more omnipresent type situation where it's going to become more commonplace with the more everyday investors and being less of a niche investment. I think especially now with all of the talks of the debt ceiling and inflation and the market being as crazy as it's been in terms of unpredictability and erratic, this is not offering any financial advice here, but I do see cryptocurrency as being more of a hedge that is being used more often as of late.
Okay.
Especially with the public companies, transparency, the security of certain cryptocurrencies. Like there are approximately 20,000 different types of cryptocurrencies, but there are a handful that are especially safe, that are have the verification, that are hard to hack, such as Bitcoin. And I think that those are going to continue to flourish. And Ether, and especially with the fall of FTX in November, Bitcoin I think fell around 15,000 or 15,500 or something, and it's at 26 today. So it's got a good rebound there. It's got staying power. You're seeing a lot companies such as BMW, Morgan Stanley, Goldman Sachs, telecommunications companies, all types of different businesses. Facebook came out with their own cryptocurrency, which is actually banned in France and Germany. But just thinking back again harkening back to the regulations and keeping those in consideration depending upon the geographic region that they're within. But I do think that it's going to continue to thrive and continue to become more and more popular. What would you say, Nainesh?
So I'll give you my perspective. So there is a real applications. There are real applications. There is a real benefit that cryptocurrency and tokens have. And the question then is, how does it become a reality more so than it is now? And where does the government regulation come into? And the government wants to lose control on their own economy. So can't assume that US is going to just let Bitcoin become a currency, or any country for that matter, except one country. And so you have to figure out whether it can become a real currency or it just stays in form of applications that can benefit the economy. It's not going away. That I can guarantee you that.
So why can you guarantee that? I mean, it's not a gotcha question. It's just
So just think about currency transfer.
Okay.
One of the biggest advantage of crypto is you don't need a middleman.
Right. Okay.
So for currency transfer, the middleman is the bank. It takes 2 days. It takes 6 or 7%. If it is a small transaction, even more. Why do you need to pay that? So the smaller financial technology company will figure out the best way to, and it's happening now. There are a lot of good applications where you can transfer money instantaneously, cost is low.
I got it.
That's the real application. Now, it's not going to, if crypto can capture that, then it has a staying power.
I got it.
You have an application.
No,
the other component that Trish, you mentioned, let's just stay with Bitcoin. There's a limitation of how many Bitcoins can ultimately produce. And that manages the value, meaning no more Bitcoins. Now, if the network increases in size, the value has to go up.
I get it.
Yeah.
Trish, you started to say something? Or are you good?
I was going to note something, and I don't remember what it is. It now slipped my mind.
That's all
right. It'll probably come back.
Well, circle back. I'm ready for you. So the thing that I think one of the biggest things that I see is the government's involvement. The taxation and just their hands in this. And I'm wondering, is having a regulatory oversight a good thing or bad thing for for this type of industry?
So Ed, I'll let Nainesh jump in on that, but I wanted to mention what had slipped my mind that came back to me, which I think is really interesting too, which is it answers more supplementarily the question that you had with respect to what is the future of cryptocurrency. The blockchain, I think, also is going to become more and more prevalent in our day-to-day lives. I went to a luncheon a couple of weeks ago, investor luncheon, and it's a telecommunication or a telecommunications company. They do like television broadcasting, gaming, that type of thing. They literally have sports teams that they sell the virtual swag, they sell the all types of different parts to the sports teams in particular, and it's all on the blockchain. It's all virtual. I mean, it is so surreal. They have this huge following though, and it carves out like a nice percentage of their sales, and it's just amazing. And the more that you follow cryptocurrency, the more you'll start to hear about this unregulated new internet is what basically they refer to it as, that's coming out, which will have all of these different accessibilities that we don't have currently. No advertising, no oversight, just a really new and foreign world. But that's the other reason why I think it's just not going away anytime soon.
Yeah, I would agree, Trish. Regulations, generally speaking, in my mind, are good if it is defining what shouldn't a new technology not do, rather than what it should do.
Okay.
We are most current topic we have is AI, ChatGPT, OpenAI.
Yeah.
If we don't have a regulation, it can create a difficulty. But it doesn't mean that technology itself is bad, right? You can't just stop it. It's not you can't control it. So if government regulation can define what shouldn't AI do, then we have a path. And then the technology can develop within that framework. Similarly, blockchain and cryptocurrency should have regulation. And regulation is good for industry most of the time. And it increases the value of the industry and the players within that. But US has somehow stayed away from regulating it the way other countries is trying. We'll see how it plays out. Almost every Federal Reserve around the world has some experiment going on with digital currency. There are countries which have digital currency out there.
No, 100%.
Including China and India.
Yeah. I mean, I'm with you. And I guess the $1 million question is, when does this happen? Is it during our lifetimes that this will happen, or are we, 50 years away from a currency environment where there's automatic checks and balances that, who wouldn't be for that, that kind of thing.
Yeah, exactly. It all depends on the Congress, right? Congress and, are they together? Are they thinking about these issues that society will face in the future? And can they do something about it now?
So I'm bumping up on time for you, and I want to be sensitive to that. So I guess my last question for each one of you is, what's the big takeaway for a business owner that's listening to this? And what kind of guidance would you give them?
That's a good one. So somebody that's looking to invest in cryptocurrency, I would say do your research.
Okay. And where is that research? Where would that person research this?
There are a number of different sources out there for technical analysis. I think Glassnode is one of them.
Okay.
You can online. There's a lot of different podcasts and so forth that you can start to, even Coinbase, which is an exchange, has a lot of really introductory 101 videos and articles, but just so that you can become familiar with the complexities of the sector, because it is very high risk, and it is there are a lot of risky currencies out there, cryptocurrencies out there, that you want to be savvy. And if you do invest, at least from the research that I have done and what it seems to be a recurring piece of advice that I've heard over and over again, is to have a strategy in place, like dollar cost averaging.
I get it.
Something that you're not being driven by your emotion, which is always a smart way to invest, to not be driven by your emotions. So I think, understanding the sector, and like you said, Ed, when you started to dig in, you realize so many nuances that and I am constantly every day. So I think that, it's not something you can dabble in. You really have to do a deep dive.
Okay.
Or work with an investor on your behalf.
Yeah. No. I get it.
What I would say is, first of all, you have to have a technical know-how. You are dealing with computing of something, and you need that technical knowledge. So be aware of that. And then you have to understand this is a volatile industry. The value of Bitcoin has been significantly volatile. Every so often, and last we saw it was over 60,000, and it went down to 15,000. That's huge. That doesn't happen in a normal industry. So you have to be able to sleep with that. You should also be aware that it will take a lot of upfront cost. Meaning, if the market is on a down, you don't want to sell your currency.
Sure.
You will have to incur the cost of running the computing power to mine the currency, but you have no income, at least for that moment. And so you have to manage that cost. Okay. So all of that combined, if you're comfortable, do your research.
I get it. So, Nainesh, we'll finish with you. So where can people find you?
Of course, you can look up completeadvisors.com, and you will find my number and name. And
that's the place, huh?
Yeah, that's the place.
And Trish, how about you?
Anchor BV, as in business valuation, financialservices.com. So anchorbvfs.com. All my information is on there.
Nice.
Feel free to reach out.
Well, guys, you have enlightened me. I'm sitting here going, well, I'm just trying to figure out what's my next step to learn more about this. But one thing I do know, never want to ever try to value a Bitcoin company.
Very few businesses are revenue so volatile. Very few businesses.
Well, you know what, and I really like that I had the chance to visit with two pioneers that are out in front of this, because I do know that that this is, you're writing the book as you go, and you may have the valuation principles to fall back on, but nevertheless you're going where no man or woman has gone before. So
you like that. Thank you.
Well, and again, I appreciate your time, and I'm certain the audience does too. So thanks again for coming on.
Thank you.
Thank you.
Thank you for joining us today on the How to Sell Your Business podcast. If you want more episodes packed with strategies to help sell your business for the maximum value, visit howtosellabusinesspodcast.com for tips and best practices to make your exit life-changing. Better yet, subscribe now so you never miss future episodes. This program is copyrighted by MISO Inc. All rights reserved.